What's up, YouTube? So, today is December 16th, 2025, and I'm going over the trade recap for the day. So, today I ended up catching these banger shorts on NQ, and basically the trade was based off of this, right? So, the New York PM session for Friday sold off extremely hard, and we left weekly lows on the week, right? So, in between that low of the week to market open, we consolidated a lot, right? But towards London / pre-market, we started trading higher. So in this moment, I'm looking for shorts. Why? Because we took out this 15-minute high inside that fair value gap. And the only reason I didn't take a short at the open here is just because if you look at this right here, the only thing I didn't like was that we were inside of this 15-minute fair value gap, right? So perfect scenario is we take out this intermediate high, this internal high. We have this 1 minute inversion. Once we inverse this, I could take the short and I could trade back to London lows. But because we're inside of this 15-minute, I don't get that opportunity. So now what am I looking for to go back to London / Asia lows, which are down here? I am looking for a continuation model from PB trading, 5-minute or 15-minute fair value gap, pulled back and continue trading lower. Now, unfortunately, price didn't deliver any of that to Asia or London. Now, this is where things get a little interesting. So something I noticed in my journaling, and if you want to take note of this, weekly lows or highs are very, very strong draw on liquidity. So now these are the two scenarios looking at in this section of trading. That's how I'll put it. So we ended up leaving this unmitigated 15-minute fair value gap, and I wanted to see if you get a MEC model, which is just a significant sweep of liquidity, and then you trade back to a unfilled fair value gap, right? So we have a significant sweep of liquidity. Let's get that off the checklist. We took out Asia, London. We have an unfilled fair value gap. Now all I'm waiting for is the highest time frame inversion. Now, that would be this 5-minute. But the way I approached this 5-minute was, if we trade through it with some displacement, then we'll get that MEC model, we take longs. If we hold it, I'm going to look for some continuation short setups back down to this London weekly low. I didn't really have a bias that I was too married to, right? So I zoomed into the 1 minute chart, and we had this beautiful 1 minute fair value gap, which was the highest time frame inversion. We had this beautiful close right here, and I ended up taking the trade, risking upper quadrant of this order block. So if we were to grade this order block here, upper quadrant would sit right there. So I was risking around there, and I was targeting back to that low. Now, the only issue with today was how I managed my risk, not my risk management, how I managed the trade, not my risk. So I had something I had to deal with outside of my house, and I didn't set a TP before I left to go do that. So I had a stop loss and I had my entry, but I did not have a TP for the trade. So we get this beautiful sell-off, and the trade, Jesus Christ, we'll just skip to that. The trade hits where my TP would have been. Now you're probably noticing it's not exactly on the red line. Reason being is because in trades, I don't even give the chance for price to wick one little tick away before reverse stops. I don't even give price that chance. I always go a little bit above the line that I'm trying to see price get taken out, which is usually the low. So we ended up coming back, trading higher. By the time I come back, this candle's here, and I'm like, wow, my trade's already done. I'm still in it. I'm just gonna close it. So I probably skewed my risk to like a 1-1 or something like that, or like just under or just right at it on the dot. So I didn't like that, but it is what it is. You know what I'm saying? So trade ended up banging out, right? The logic worked. That's what I was happy about. So that was kind of my trading day on the day. And we have a good start to the week. So now I want to go over the second part of this video, which is basically going to be the journal aspect of my journey to getting funded. So these are my numbers for December. I'm currently up around $23 on the month, 50% trade win percentage, profit factor is 1.3. Data win percentage is a 50%, and my average win loss trade is a 1.3. So I'm not upset with those numbers. I'm not like, oh, so happy about them either. I'm contempt, I believe that's the word. I'm okay with these numbers. I obviously prefer better. I'm striving for better, but I'm also being realistic. I have transitioned into a new entry model, and it struggled in the beginning, but I'm staying consistent, and now I'm starting to see a little bit of success with it. It's a very small amount, but time will tell. And I'm just going to continue working on the things I need to work on. All right. Like, one of the things I need to work on is I want to improve my wrist to award. I used to have a big problem when I first started back testing this entry model in the beginning of November with only targeting the internal draw, and I would leave money on the plate with the external draw, or I would miss out on trades because of not focusing on the external draw. So I'm trying to fix that this time around, as I'm improving with the transition, and I want to improve my consistency. I obviously don't want a 50%, I don't want to, right now I'm flip a coin. You know what I mean? I want some true consistency, 70 to 80% win ratio. So I'm shooting high. I'm shooting at the stars, but it's worth it for me. And I'm going to continue going. I'm going to continue trying, striving, and being reactionary with the charts, not trying to be too married to anything. I feel like I'm getting better at that. My patience is improving. I just have to fix the little things, and I'll start to see improvement, I haven't had a back-to-back win in a while this year. And it sounds crazy because, like, wow, 2 wins in a row you can't get. But I am probably the definition of a break-even trader. So I'm currently down $400 on my eval from Alpha Futures. And I'm going to continue going. I'm not going to force size. I'm not going to do anything. I want my first evaluation to get beat off of just skill and proper risk management. So with that being said, I'm excited to keep this journey going. I hope you guys stay tuned in, and I'll see you guys in the next one.